Good evening, friends. Welcome to Adda 24/7. We are in Cracker MCQ series for CAIIB. In this series, we are covering all the objective questions related to ABM, BFM, and retail. Okay, so follow this series thoroughly and from the start, because important part is we'll be cover. What do we do is one second. What do we do over here is we cover all the related objective questions because this single line they carry almost 40 exam. One liners. Let's start the series now. Before going ahead, I would suggest download Adda 27 app on your mobile. In this app, you'll be getting the premium study material, job alerts, daily quizzes, you name it, you have it. Live classes. You get all the 2 batches. We have certain. Okay, look at the part. Okay, Mahapack, buy Mahapack. You get base packs of this. And December 22 is your last jump. Don't waste time now. Your increment is waiting for your increment, right? For CIB. Also, subscribe officers at the channel. In this channel, you will be getting all the latest updates, latest CIB material, and what are the CIB changes. Okay, let's move ahead. Yeah, I'll come to the batch later. This batch is the best batch which coming up. It has come already for CIB. I'll come on this later. Use this code Y for you. Let's start with this. Okay. Yesterday I asked one question in work. How many of you have solved? Kindly answer. How many of you have solved? Let's see that section. Everyone, please type here. Has anyone tried this? In case of information technology and software development, loans up to 2 crores can be sanctioned. Good evening, everyone. Yeah. So, in case of technology and software development industry, loans up to 2 crores can be sanctioned. So, voice is not here. Everyone, voice is complaining. Others, can you hear me? Type in comment section if you hear me clearly. Everyone, if you hear me, yes. If you hear me, everyone was here. Right? Yeah, it's clear for others. What do you say? You just log in, log out then. Okay. So let's see. Let's see over here. Hold on, just hold on. Let me see what's problem. Is there any problem? Hi. Okay, there's some cracking going on. Okay. So some internet problems are there. That's this is the problem. Okay. So let's solve the problem first. Let's focus on the problem. Okay, what's over here? Putting answer for this, loans up to 2 crores. It is. The right answer is cash. Many of you might have done cash, but cash is not answer. Okay. The answer is turnover method. Turnover. Okay. Turnover method is answer over here. How? Let me show you this. There is a Rbi circular of this. Let me show you the Rbi circular. Okay. One second. Let me show you the Rbi circular over here. Hold on. This. Yeah. This is the Rbi circular. Hold on. Yeah, this one and yeah. Done. Now look at this Rbi circular. It says that in case of borrowers, I'll expand this. In case of borrowers, this is for IT, remember, okay? In case of borrowers, working capital limits of 2 crores, assessment may be made at 20% of project turnover. Right? Yes. Up to 2 crores, it may be made at the projected turnover method was given by whom? Projected turnover by that NICOM. Okay? That's why there is committee turnover method. Because remember, if you want it for higher than that, okay, let me show you that circular fully. Okay, let's go to that circular full. See this. Up to 2 crores, it is 20% of the turnover. However, in other cases means what? Other cases means this is related to IT only. Working capital limits up to 2 crores, it is 20%. In other cases, bank may consider assessment of MBBF on the basis of monthly cash budget system. In other cases, okay, it said that it's in other cases. Okay, for borrowers enjoying working capital limits of 10 crores and above, the banking system from the banking system the guidelines regarding the loan system would be applicable, means normal loan system. So up to 2 crores they have given that made 20% of the projected turnover. Okay, that is to be used. Got it everyone? Let's move on then. Hold on. Yeah. Okay, let's move on to the next question. At the time of granting fresh facilities, okay, banks are required to, number one. So what are banks required to? There is a slight disturbance going on, correct? I have seen the disturbance, okay, but due to all the rains over here, huge rains are going on in this part, okay. So that's why this disturbance might be there. Slight disturbances are there, okay. So at the time of granting fresh facilities, banks are required to, number one, obtain declaration from the borrowers about a credit facility already enjoyed from them from other branches. Now whatever you have got, the customer has got from other branches of the same bank. So do you need to get the declaration from the customer? Suppose if I come to you for sanctioning the loan, okay, when I come to you for the loan, will you take a declaration from my side that I have not got any loan from any other branch of yours? We are in core banking. How will you take the declaration for your bank itself? You can't take the declaration for your bank, okay, because your bank you are already having the systems over there. You did not take them, right? Second one, obtain the declaration from the borrower about the credit facilities already enjoyed by them from branches of other banks. Now this can be the answer, other banks, okay, because we don't know. Even this answer would go in some of the years, coming years, right? Why? Because we have a CIBIL score, right? But presently we do take this B, okay. What about C? Obtain the declaration from the borrower about the credit facilities already enjoyed by them from outside India. We never take anything up till now for outside India. Here we do take them, we do take for corporate clients, but for retail clients we never take such things, okay. In fact, I would suggest here, it's my personal thing, that it should be taken nowadays, because now with the internet age the things have changed, okay. So it should be taken, that's what my logic says, okay, and it will come in few years, okay, but presently for retail customers we don't take it. So first the answer over here is, at the time of granting fresh facilities, banks are required to, number one, obtain declaration from the borrowers about the credit facilities already enjoyed by them from the branches of other banks. Got it everyone? B is the answer. Minimum balance in CRR account which banks are required to maintain at all times is of the average daily required reserve for reporting Friday. So what is the minimum percentage which is to be kept for CRR? Means here it's not the CRR percentage we are asking. This CRR balance which is to be maintained by the bank is to be for what percent? Suppose let's say if your CRR amount for that bank comes out to be 100, let's say 500 CR, 500 crores, okay. If the amount of your CRR as per your 3.5 or 4% whatever you may be maintaining, if that amount is 500 CR, then how much amount you need to maintain every time? So the answer over here is 70%, 85%, 95% or 80%. Means what? 500 CR is my required CRR amount. So do I need to maintain into 70% every time? Or do I need to maintain 85% every time? Or do I need to maintain 95% or do I need to maintain 80%? So that is my question over here. So the question over here, what will be the answer over here? Can anyone type the answer over here for this? A, B, C or D? Which one is this? What is the answer over here? A, B, C or D? What is the answer for this? Yeah, correct. Everyone, yeah. Many of you have typed, okay, some of you have typed B, okay. The correct answer is over here C, 95%. So every time the bank will have to maintain 95% of the CRR amount, at least 95% of this CRR amount, okay. Now this 95%, there is again an RBI circular for this. Here everywhere RBI has given the circular for the same, so we have to follow that circular at any cost, okay. So the correct answer over here is 95%. Everyone got it? Clear? Okay. C. Okay. Now this one, next one. Okay. Clear everyone? Okay. There is some lag in the presentation, it seems. Means you are getting this because of these rains, heavy rains are going on over here. Okay. Post disbursement supervision by lenders, particularly in respect of loans up to dash, should be constructive with the view to take care of any lender related genuine difficulty that the borrower might face. Now what is the question actually? What do you mean by this question? See here, once you disburse the loan for any customer, up to what amount should the lender related difficulties be solved? That is the basic meaning of this question. Up to what amount should the lender related difficulties be solved? Okay, whether the loan is up to 25,000, whether the loan is up to 50,000, whether the loan is up to 1 lakh, and whether the loan is up to 2 lakh. So what is the answer over here? 25,000, 50,000, 1 lakh or 2 lakh. So what do you think should be the answer? A, B, C or D? I'll show you the Rbi circular also for this, because I'll show you the Rbi circular, not an issue. Okay, Rbi circular will be shown to you. Okay, let me show that Rbi circular only. Let's go there. Let's go to Rbi circular directly. Okay, see this. This is the circular form. Okay, first let's see the circular, then I'll show you the when is the circular given, everything. Post disbursement supervision by lenders, particularly in respect of loans up to rupees 2 lakh, should be constructive with the view of taking care of any lender related genuine difficulty that the borrower may face. Okay, so the amount is 2 lakh. Now what does RBI say? Why this concept might be given to you? Post disbursement supervision by lenders means what? This is always done by the bank as such. Means whether that customer was facing any difficulty while getting the loan from the lender. Lender means banks. Okay, whether that bank, the employees of that bank were not in favor, or they were not kind or not cooperative to that customer, that was taken care of in this lender related issues. Okay, got it everyone? Next one. Before going ahead, see this. This batch which is going on presently for BFM, ABM and retail, it has started from September 5th. It is from 7 to 10 p.m. You will be getting 120 plus hours of live two-way interactive classes, detailed subject, recorded 24/7 videos. Now these things are very important for you. Remember, because this is the last batch. December 22 is the last batch with the current portion. Join this batch ASAP. All those who have not joined or who are planning, kindly join this fast. Okay, so let's move ahead. I'll come to this code. See this Y432 code. This code is to be used by you for getting the maximum discounts. Now how to use this code? Okay, I'll show you at the end, not now. Okay, let's wait for some time. Next question. For transfer of borrower account from to another bank or financial institution, consent or otherwise, that is objection of lender, if any, should be conveyed within the dash days of receipt of the request. So within how many days the consent of the other, means consent or otherwise of the lender, means earlier lender. See here, the case is like this. There is a customer over here. Okay, and he is getting a loan from bank A. Presently he is getting a loan from bank A. Now he wants to shift it to the bank B. He wants to get the loan from bank B now. Okay, now if he wants to shift the loan from bank B, then he will apply over here to this bank, right, and get all the documentation, everything done. But this bank B needs to get the consent or objection, any problem related issues from this bank A. Okay, from this bank A. So once this bank sends a request to bank A that please give us the details of this customer, how this account is, whether you are agreeing to transfer this. So these things are asked by this bank B to bank A. Now the question over here is, in how many days should the bank A answer to bank B once it receives the request? So the answer is 7, 15, 21 or 30. So what is the answer? A, B, C or D? What do you think is the answer, everyone? A, B, C or D? Correct, correct. Yes. A, B, C or D? 7 days, 15 days, 21 days or 30 days? Okay. General rule followed is, means the even RBI says that the reply from bank A needs to go to bank B within C 21 days. So within 21 days this bank A needs to answer to bank B that see, this account, the conduct over here in this account is good, we are ready, we are agreeing to transfer this here. It can happen that bank A, see, if the customer is a good customer, let's say he is a Reliance, okay, with you, and is now shifting to bank B, will you agree to shifting from this from your bank to other bank? Definitely not, because he is a good customer. So this always has a problem. Okay, this problem means we always get a CR from the earlier bank, confidential report. Okay, it's generally the rule followed, CR from the earlier bank. This CR is many a times given, some changes, slight variations are given. If this bank A does not want the loan of this customer to go to bank B, in that case this bank will always try to prevent this loan from shifting. Okay, practically this happens. Okay, but if the customer wants, in any case you can't stop it, because generally the customer shifts for what? He or she shifts for basically rate of interest and other expenses. Okay, next one. A banking company can acquire the shares in a company as a pledge, mortgagee, assignee, etc., subject to which of the following ceilings? Means if this banking company, means let's say SBI can acquire the shares in a company as a pledgee, mortgagee, assignee, subject to which of the conditions? Means this SBI can, I am giving an example of SBI, it's not SBI only. Okay, it can be PNB, any bank, HDFC, ICICI, any bank. So this bank can acquire the shares in the other company, in a company as a pledgee, means in a company, separate company, it's not a banking company only, any company, subject to what condition? Not exceeding 30% of the capital of the bank or 30% of the capital of the company, whichever is higher. Okay, is this the answer? B, not exceeding 30% of the reserves of the bank or 30% of the capital of the company, whichever is lower. So reserves of the bank or 30% of the capital of the company, B. C, not exceeding 30% of the paid up capital and reserves of the bank or 30% of the capital of the company, means that company to which it is acquiring or getting it as a pledge, whichever is lower, C. And D is 30% of the capital of the company. So definitely is here, D is out, D is strictly out, so D is not the answer. Now you have to answer between A, B and C. Okay, what do you think should be the answer? A, B or C? What do you think, everyone? A, B or C? What do you think is the answer over here? Not exceeding 30% of the capital of the bank. See here, capital of the bank, that is 1 point. Reserves of the bank, second point. And here paid up capital and reserves combined. Okay, so 30% of paid up and reserves. So okay, I'll answer this, not an issue. Okay, first you answer A, B or C. The correct answer over here is, before that, what is this paid up capital and reserves totally called as? Can anyone answer this? Here, this is not a part of this question, but paid up capital plus reserves is called as which capital? Tier 1 or tier 2? Type it in the comment section. Tier 1 or tier 2? Paid up plus reserves, this is a part of tier 1 or tier 2? Fast. Tier 1 or tier 2? Yes, it is a part of tier 1, right? So what is the answer? Answer is C. Okay, the bank which is acquiring the shares of the company as a pledgee, mortgagee, assignee, etc., should not exceed 30% of the paid up capital and the reserve, means basically this T1 capital, tier 1 capital, okay, of the bank But tier 1 includes not only this, it also includes that what PNCP and IPDI, okay, this perpetual non-cumulative preference shares and innovative perpetual debt instruments. That's why I say join this class. In this class we'll be taking all the details, okay. Or 30% of the capital of the company, whichever is lower, remember this word lower, okay, whichever is lower, that is acquired. Got it everyone? So the correct answer over here is C, okay. Move on. Review of the monetary policy and the credit policy is conducted by RBI on. So RBI conducts this review of this credit and this policy on what? Bi-monthly, quarterly, half yearly or yearly. This is a quite simple question now, isn't it? What do you think? Bi-monthly, quarterly, 3 months, half yearly, 6 months, or yearly in a year. See here, yearly is out, 6 monthly is out, because you know by this time you already know that C and D can't be the answer. Now the answer can be either A or B. So what do you think? What do you see? You kindly read the newspapers also. Kindly read this Economic Times. The answer is B or A. Which one? A or B? Fast. A or B, A or B, A or B, A or B. Definitely not C and D. Half yearly, if RBI goes on reviewing this monetary policy, India will go to, means down. It will go down, right? RBI, see here, nowadays RBI and the financial world has become so fast that you can't be such slow half yearly and yearly. You have to be either bi-monthly or quarterly. So what is the answer over here? Correct answer. Correct answer is, everyone, yes. Correct answer is, oh sorry, it is bi-monthly, okay. A is the correct answer. Even I got confused, means by mistake I clicked it over here. No, the correct answer is bi-monthly. Every 2 months RBI checks its monetary and credit. What do you mean by this monetary and credit policy? What does it do in this policy? You might be seeing every 2 months in the Economic Times, CRR reduced, CRR increased, repo reduced, repo increased. That is the policy, okay. That is basically bi-monthly policy. Got it everyone? Now a homework question for you, okay. Now this is the homework which you have to solve. Which of the following interest rate, I'll answer this tomorrow. Which of the following interest rates are fixed by RBI and not left to the discretion of the banks concerned? Okay. Which of the following interest rates are fixed by RBI and not left to the discretion of the banks? Means what? Here, if you see the loan rates and deposit rates, are they fixed by RBI nowadays? Suppose for let's say FD rate, are they fixed by RBI now? Or your home loan or whichever that other commercial loan, does RBI give you any rate over there? No, nothing. You decide on your own, right? On your bank's NII, net interest income, right? The difference between asset and liabilities. NIM we call it, net interest margin, okay? Depending on that. So RBI says you do whatever you want. But there is one category where RBI says no, we will fix it. So what is that answer? Let's see. Savings bank, export credit, NRE and DRI. Savings bank, export credit, NRE and DRI. Many of you have a feeling that export credit may be the answer because it is related to export of the country, all that exports. Remember, read it first. Whatever is given by the Rbi circular, read that first. Tomorrow I'll answer this. Okay. So before going, I'll again suggest you go for this batch, and how to use this code I'll show you live over here. Okay. Just wait. I'll go to Adda 24/7. Just hold on. Yeah. Let's go to Adda 24/7 live. Okay. Once you go on Adda 24/7, see this. Go on the first page. First page you'll see all the JAIIB and CAIIB. Click on JAIIB and CAIIB. You'll see two things over here. One is Mahapack, and second is this in November December English batch. You can go for either of these two. Okay. If you go for Mahapack, I would suggest it's the best. I'll show you what is there in the Mahapack. Okay. In Mahapack, if you click, see this. This is the JAIIB CAIIB ka Mahapack. In Mahapack, you'll see the fees. First, our eyes move to the fees. You'll say 50,000. No, move back. No, don't move back. Mahapack is like that OTT subscription. You get that OTT subscription, Hotstar, Netflix. Everyone is watching Netflix, I know. Okay, so Hotstar, and then for 1 year, see, this is validity is 12 months. For 1 year, whatever these batches will come, they'll be for you. Okay. Now this fees also we can reduce it. Look at this. What is the code I told you? Y432, right? Y432. See this in validity. See this in this Mahapack. What do you get? See this. For JAIIB, CAIIB, it's a combined this. You can also have a separate CAIIB this Mahapack. 4 plus batches of ABM, 3 plus batches of BFM, 500 plus case studies, then 30 full length mock tests you will be having it. You can get it on the notes directly. Okay, you can read this. Also about the fees part. Now look at the fees part. If you go to the fees part, see this 59.99. Click on view offers. Once you click on view offer, see this. Put the code. What was the code? Y432. Click on apply. Now look at the fees. See this. 50,000 fees has reduced, 59.99 has reduced to 11,729.